welcome to the special coverage of Mint's Investment Summit 2020. On the sideline of the panel, I'm in conversation with Chandresh Ruparel. He is the MD and Head of India at Rothschild. So, Mr. Ruparel, welcome to the show.
Thank you.
So your panel was about the challenges of the M&A. So first up, I want to ask you, what are the big challenges that is in finding the right financing of the deals?
Well, I think the right financing of the deal is just merely the fact that financing is not available or very, very difficult to finance. You know, as one of the panelists, Mr. Rao, also mentioned that merely raising 5,000 crores, forget acquisition financing or any financing, it's becoming virtually impossible as such. It comes with great difficulty. So one has to look at the usual sources of NCDs and the like. So although there is liquidity in the system, but the will to finance or for lenders or any providers of capital, debt capital especially, to finance transactions is continues to be a big challenge.
Right. That's very interesting because one of the other speakers I had spoken to of the other panel, he's from the global private equity firm. He said that there's a lot of money actually waiting on the sidelines. They're waiting for the right opportunities and the right investments to do in India.
Yeah.
Do you agree to that argument?
Well, I would only say that if you were to look at it from the financial crisis onwards, that is from 2008 onwards to today, I think there is only liquidity in the system globally. And yes, there is a lot of money waiting to come into. Money has to find the avenue for returns and growth. So that is what India is all about, and it is true that there is money waiting to be invested here. And in fact, if you look at even the M&A and private equity deal flows, perhaps last year 50% of the deal value was counted by private equity, which says something that there is a lot of capital which is waiting to be invested. And the second part really is that I think if you look at India doesn't have capital of its own. I mean, thus far we've been debt funded, and there haven't been really equity generating opportunities which have stayed in India. So to that extent, yes, that's right, that there is money which is waiting to be invested, but unfortunately there is no money domestically that is available that can be invested in the country.
Right. So why do you think there is a kind of probably out of sync investments versus the kind of opportunities available? Because a lot of foreign money waiting to come to India, but probably less number of opportunities here. Why do you think so?
I think, you have to look at an investment from an equity perspective and a debt perspective. Equity is like I said, there is private equity, so there is equity which is available. As far as debt is concerned, where is that debt headed? Banks traditionally in India are more used to financing working capital. So for them to look at financing acquisitions or doing out of normal financing, debt financing activity, that is becoming difficult, or they cannot envisage the risk or cannot price the risk properly. As far as areas of or other avenues of debt are concerned, otherwise traditionally you would look at players like insurance or mutual funds which would invest in debt capital or requirement of debt as such. There have been strict guidelines of SEBI as far as mutual funds are concerned in terms of financing equity. As far as insurance companies are concerned, with the kind of capital that we require, call it infrastructure, call it forget M&As, even the regular infrastructure kind of activity, we don't have large insurance companies. So the pool of capital, long-dated capital as such, there is a dearth of that capital. So one has to look at new investments, one has to look at outside capital to really come in and make an environment which is suitable, both in terms of returns, both in terms of ease of repatriation and tax, for that capital to be attracted towards India.
So according to what's the way forward, because banks on one side, credit growth is not actually increasing, especially for the PSU banks. On the other hand, corporates are waiting for money to be actually pumped in their capital. There is not much of capex happening, the private capex happening. This is a scenario where we are kind of in a slugfest. We are not moving ahead. Where do you see India is headed towards this credit financing?
See, first of all, I think, as far as growth is concerned, there is immense growth which is still possible. Where have you seen an opportunity where oil prices are down to the level that they are, interest rates are at a level where they are today.
But yeah, because you said interest rates, there was also a lot of corporates. The balance sheet shows that the interest rate transmission hasn't happened
Correct.
as much as RBI would have anticipated it to be.
Yes. But RBI is in its own way trying to force the
doing all
banks
the
to
measures,
taking all the measures for banks to transmit that interest rate. I think again it's a question of the asset liability mismatch. The classic thing that a bank looks at is to timing kind of a risk and interest rate risk and a solvency risk. I think that is what the banks are all being more risk averse about today. But as far as what can actually move things, it is really you have to start that cycle. I think the whole thing is about the velocity of money, and if you were to do that, I think there are first thing I think you need to kind of figure out that were we in an oversupply kind of a situation as far as the country is concerned. Maybe not so, but if you were to look at last month's number as such, there is some semblance of growth that is happening in the power sector. For example, the generation and of power has increased by about 7% or so, if I'm not wrong. So there is some bit of activity which is happening there. So once the supply side, oversupply call it side issues are addressed, which seem to have been, I think then one is talking of really invigorating the demand as such. And that demand, where can it start? I think that has to start by probably spreading the demand out. So one is looking at, on one hand, ensuring that rural consumption happens, and there are avenues for improvement in that consumption, which the government seems to be doing with some sort of funding that is going into the rural space as such. That is one side of the things. The other bit which typically happens and which is empirical is that you look at things like developing more infrastructure. So investing in infrastructure, not with an eye for profits, but with an eye for actually enabling growth, and which is exactly what this government is doing even now. So I guess it's something, if you look at it from a perspective of the structure of the economy, GST probably has stabilized now. Interest rates are good. You probably are looking at some sort of demand to happen. You look at the new announcements that were made on the manufacturing side of things, and if one has to take advantage of what China is going through, then I think there is an immense potential of growth for India, and that needs to be funded. And that funding should probably be available. I guess it's just a bit of a stupor that we are in today, and probably the first 2-3 signs of activity, and we should start growing again.
So, Mr. Ruparel, you are on the panel talking about the challenges. So, what is your key takeaway after attending the Mint Investment Summit 2020?
Well, I think, we would like to, at least I would, when I got into the discussion before, I thought that there was probably a lot of, maybe I wouldn't call it negativity, but probably that we have not moved much. But in the last year, the kind of steps that have been taken, changes in the IBC. Actually, transactions have happened in IBC, so there is some sort of a precedent that has been set. We can only do better, going forward. So to that extent, I think that there is a bit of, I would say again, like I started off, that there is a bit of concern on is financing available. Second, is the process going to be clarified? So am I going to have a quick in and quick out as far as a transaction is concerned? Can I do a transaction quickly? Is there a defined time frame? Is there a defined process? I think those are the two concerns which one was talking of. I think the third and important one is really the role of financial investors. Now, be it in terms of pension funds or private equity, I think there is capital which is waiting to be invested, like you also mentioned. So I think those are the key takeaways. I think India presents an excellent opportunity. And there is a lot of transactions that one will see going forward.
All right, Mr. Ruparel, on that note, thanks a lot for joining.
Thank you.
For more details and updates, stay tuned.